Caroline, so very interesting to see Palladium just outpacing those gains. Even gold, more than gold this quarter, surging about 20+%. What's going on here? Is it all about China?
Well, it's about China. There's an interesting relationship between gold and palladium, and that's more of a technical type of indicator where the two trade as a spread. And a lot of times gold leads in terms of that complex, in terms of the precious complex. And gold, as we can see, has really been outpacing this year for a number of reasons. After Brexit, it was really a flight to quality, and gold really delivered those safe haven returns. And so palladium is doing a little catch up now. One thing that you might want to look at, though, in terms of palladium, though, is that those Chinese numbers, they have been strong, but they potentially could falter in the future. So we potentially could see the softening of demand. And we've seen a lot of demand numbers out of China that have been lower across commodities. And so that relationship between gold and palladium might start to break down a little bit. So you might see that spread widen out.
Yeah, I mean, it's fascinating because, you know, when you think about the big commodity stories of the year, you had the huge drop in oil, although I guess that was more at the beginning of the year, you know, and this hard landing, soft landing China story. It didn't, if you'd asked, it wouldn't have felt like it might be a good year for commodities, and yet that's what it's proven to be.
You couldn't be more right. And so there's always a knee-jerk reaction. You know, we hit our commodity lows kind of last year into this year, and you know, I'd say, you know, supply is still an issue, but we've done a good job of cleaning up some of that, and we've had a real inflow from the investor community. And a lot of times it has to do more with what's going on with equity and fixed income than actually commodities. In this case, it's both. In this case, commodities really became a bit oversold, and balances have cleaned up a bit, and demand has come in a little bit better than we expected.
And you sent us this really nice graph showing total returns of various commodities, and if we can pull that up, we can see that precious metals are outpacing those gains, also led by industrial metals as well. But then you can see grains and energy, though, lagging. What's happening with grains? Because I know that soybeans is seeing this huge surge as well.
Yeah, so when going into July, we had a lot of things happen in July. Essentially, July was a real, I guess, loser for commodities, if you will. It took away half the gains of the Bloomberg Commodity Index. But if you look at the grains specifically, is that the expectations for the plantings in the U.S. are quite good. And so you really, you know, you had a lot of lead up in terms of people feeling like it could disappoint. Those fears went away, and we had such a sharp drop, especially in the grain sector.
One metal, or base metal, I guess, that's not really feeling it is copper. And Dr. Copper seems to be feeling a little pinch here. What's going on with copper, and is that more of a guideline for us when it comes to future market moves than the other the commodities? You
know, it's interesting because, yeah, you're right, Dr. Copper, and it's definitely the headline base metal, and it's definitely lagged the others. I actually think it's a chance for an uptick in copper, and I think going into the second half of the year, base metals will look to continue to be strong. So what we've had is the miners have really cleaned up their act. So they have really they've shed non-core assets. They really have, their assets are performing. Prices are higher. We have had some, you know, production cuts on nickel, or we've had some production problems there. But those are starting to dissipate. But overall, base metals looks quite good.